is up, my family? Welcome back to the channel, man. I'm really excited to be streaming here today. Go ahead and throw those A's in the chat if you can hear your boy speak. Throw those A's in the chat right away if you can hear your boy speak. Good evening, good morning, good afternoon from wherever you are in the world. What is up, my family? Yeah, man, did we meet our targets today on everything? I'm going to be honest with you. I don't actually know. I didn't even look. I didn't even look if we actually met the targets on our plays. So if we did nail them, bro, let me know in the chat, man. But everything is chilling, man. Great man saying, I'm not jumping on anyone's finger. Bro, why? Why? What in the world made you say that? What is up, my family? Good to see everybody in here. Dude, that was jokes, man. You just come up in here to Arca stream and be like, bro, I'm not jumping on anybody's finger, man. I'm like, all right, yeah, all right. Yeah. I love you, buddy. Let's get this thing rolling, man. Let's get the feels up in here, man. Let's get the vibes moving, right? Great man, look up. Hey. Oh, dude. Oh, so I got you. So all right. So somebody asked, anyone jump on his finger suggestion? Oh man. I see. Game Banger, what is up, man? Thank you so much for that dono, bro. Dude, anytime I see that Narcos, Pablo Escobar thing with him in the freaking dried ass pool, I already know it's the live stream. Bro, I know it all too well. Alex, what is up, man? Good to see you in here. What's up, Andres? Good to see you there, man. Miguel, what is up? You giving me a Ric Flair voice? Bro, I thought it was more like Ricky Ross, man. I'm just kidding, man. Many people say I have a combination of all kinds of weird voices out there, man, but it's all good. I enjoy it, man. All right. Yeah, that's right, man. That's right. We're going to lighten the mood real good. Real good, man. Guys, I absolutely love that we're already streaming here tonight. I love that we're going to go over the price action. People are feeling good today, right? We absolutely got some good price action, and we were already identifying that bull trend from the prior day. Remember, guys, it was yesterday's no. Was it? Yeah, for today's price action. It was yesterday's live stream and the one before that where I'm like, guys, check out the viewership. It's coming down, right? So you guys that are early right now, you guys that are chilling, watching the stream, you guys are going to be the ones to benefit from the opportunity coming up, right? Oh, man. What is up, John V? Saying first time here, taking it all in. My brother, I really appreciate you for coming on by, man. Can't thank you enough. I really am out here, man, to just provide as clean as information as I could, right? I want to make sure that the team and everybody here watching it that's subscribed to the YouTube channel, that's following me on Twitter X, that's inside of the Discord, whether it be free or inside of the trading team, I want to make sure that everybody is absolutely clear over what I have to say, right? I just have an opinion, and the opinion is based around data, right? So it's not based around what people are saying. It's not based around anything else like that, right? It is truly based around data. And for those of you who are already in here, right, who are already part of the Arca Bulls team, who have been a subscriber, who have been an OG here with me for a long time, you already know how I trade. I'm a data trader. I really do believe, and I stand by that concept, man, that numbers do not lie. People do, right? So you guys already know that. What is up, Blessed? Good to see you here. Hello to you as well. Ian Tucker, my bro, giving that shout out. Guys, make sure to smash and destroy that like button, because I promise you, it's you guys that have made this possible for the Arca Bulls trading team, right? For us to just soar, right? Guys, make sure to hit that like button for me. Do me that strong favor, and we're going to get this thing rolling, right, you guys? We're going to be starting off, of course, with GME. We're going to be looking at AMC as well, and we definitely have guys, you know what? We should be looking at the broader markets as well. I don't know if you noticed today, right? But it was an interesting time that GME had had upside in its price action, while Nvidia was dragging the entire market down. So those are part of the inversions that I was just talking to you about a few days ago. Samantha H, what is up? It's very good to see you here. And if you sent me a DM, because I know you usually do, I apologize for not looking at it, but send me another one. I'm going to be looking out for you, right? After the stream. I want to know how the pups are. I want to know how the family's doing. I want to know how you are. So I hope everything is good, and thank you so much for coming on by and making sure that everybody's hitting that like button, right? Appreciate you so much, Sam. Love you. What is up, Alex? Yo, Arca, I'm a barber. I definitely owe you a free cut for making my days, bro. Dude, I would never take a free cut from you, dude, and I would absolutely pay you for your job. And I promise you that, and I will also tip, my dude. So if you were in California, man, I would immediately go up into your barbershop, bro, and make sure that I can get that fade, because I like that skin, bro. I like that skin. Make sure to get that flare all the way up, right? Leave a little bit on top so I can make sure to comb it backwards, man. Let's go. You already know it, man. You already know I need a little bit of a line up in the top. Let's go. I know you know all that talk. Thank you, Sam. Yes, send me the updates. C12 Omega, what is up, man? When's the pizza party? Well, C12 Omega, that usually happens right after the live stream, right? It usually happens right after it, and we go into the trading team inside of the private Discord, right? And then we literally have a pizza party, man. We go a little insane there sometimes. We go very serious sometimes, right? It depends on the mood, bro. It really depends on the mood. Like today, you know, I finished trading, you know, a few executions by, I would say, maybe 9:45 my time, like 12:45 your time, Eastern time, right? So, or market time. So right around that moment, I was like, okay, well, I already made the trades that I wanted to today, right? So you cut it out, ran out of cash, doing that whole thing, whatever it is, right? So it was interesting because people were really catching my dismay, right? Catching that I would bring up a little bit of a different topic and be a little more loose than normal, right? It was loosey-goosey today inside of the trading team, which I appreciate too. You know, sometimes I just need a bit of a break, right? I've been actually pushing unreal hours so that I can get the master students to finally get in. And by the way, guys, I know that the majority of you have already received your welcome package, right? But know that there is one more batch of people that's going to go out tonight, and that's the last of it. So all those of you who already signed up and already have that package, look at the link in the bottom. That's where I'm going to take you, okay? That's going to be the Arc University, and I want you guys to just wait there patiently. And I'm going to go and assign the roles. I just need to make sure to finish the final exams for the previous students, for track 4 students. So track 5 students, just wait there patiently. Make sure to paste your master student badges inside of the orientation page, and then everything else will be available to you. Okay, guys? So you guys can chit chat with each other in there. In fact, you actually have access to talk to the track 1 through 4 students as well. So yeah, team, just do me a favor and kind of hang out there. Be patient. I'll make sure to get you guys right inside of the RQ. All right, you guys. Well, what's up, Rod? Good to see you there. Jay, what is up, man? Miguel, good to see you. I'm trying to say, yeah, guys, we're gonna just take a quick little minute here, just so that we can get the chat filled up, and we're gonna start the analysis here, moving. Right, very excited to be sharing with you some topics here. Ian Tucker saying Arca has been burning the candle at both ends for y'all. Show him some love by smashing that like button. Rand, at least y'all can do to help him out, right? I gotta say, man, that is absolutely, I would be asking for a lot, right? Make sure, guys, hit that like button, subscribe to the channel, do everything necessary to finesse that algorithm, right? Because when we finesse it, it gives the opportunity for other potential traders or other potential talent to come up to the trading floor, or me right here in the live stream, and express their talents or their opinions. And I see it straight in the chat, man. I see it. I try to interact with you as much as humanly possible. Yeah, click on that one, baby. Click on that one. You guys, yeah, I have my little 4-year-old boy here right next to me all the time, man. He's chilling right there, eating his snacks, drinking some water. But Andres is saying, can I offer all of your students free AI-powered resume for anyone looking for a job? 100% free. Andres, dude, that is incredible of you, my brother. And I can actually make a bit of a trade with you, right, for that. So please go ahead and send me a DM inside of the Arca Bulls server, and I would be able to provide something for you in exchange for what you're doing for the team, my brother. Of course, we can do that. Thank you so much. And what's up, Brokey Boy is saying definitely a radio voice. My dude, I hear that so very often, but I gotta say that I am, I am, dude, I am a very well trained and seasoned audio and mixing mastering engineer too. So this is as best as I can make a headset sound. So this is actually not a professional mic right in front of me, but it is a headset, right? But it is going through a chain of very expensive gear. But yeah, man, thank you so much for acknowledging that. It means a lot, actually, when somebody's able to notice things like that. And I will say that the mix certainly brings out the overtones, brings out the undertones and everything that my vocals have to offer, right? Andres saying dope. My buddy, thank you so much again. So Stupid Bitcoin said Mixmaster Arca, my bro. I love it, man. Patricia, how you doing? I know that you got, I think that you were part of the batch, right? You got that welcome package. Yeah, just be patient there, hang on, and we'll be starting our journey with the ArcMaster students in, Saturday. Yeah, this Saturday. We're going to be starting it up, guys. So I got to be honest with you, team. I think I have maybe 3 or 4 more seats available in this. Make sure to get in touch with me at ArcMastersCourse@gmail.com to reserve one of those seats and claim it right away before they are entirely gone, because I think I can extend it by maybe 4, maybe 5, right? There's limitations to the Discord, and you know how that can be, man. But yes, reach out to me, ArcMastersCourse@gmail.com, if you would like to get into the crash course beginners mentorship for charting and trading, right? You guys, really stoked. Now, Matt, what is up, dude? Are you telling me you're talking about Verb? You're talking about Verb. All right. Well, I do have Verb, right? We can increase that Verb in any way that you want, right? Or I can put it as a delay. Yo! We got all of the effects, man. We got all the gear. We can do it on the freaking fly, man. In fact, we can actually do even different qualities of that effect too, man, because that was just a weird little chamber reverb, right? But when you want to get into like serious stuff, right? You can get into fab filters, right? You can get into things built into the antelope audio interfaces, all that good stuff, man. And then you'll be surprised how you can get things to sound like absolutely pro, right? For example, this is my audio router here, right? This is your mixer. And check. You're hearing me speak through this, right? I have a built-in Verb right here. Yo. Right? So I can go ahead and turn those things on and off as I please, right? Even digitally, but I do have it as outboard gear as well. But guys, very stoked to hear you and have you here in the chat. We're going to be going over AMC and GME. I am not about to tell you that I'm seeing 300 people in here, and I definitely don't see the likes reaching the 100 mark just yet. Let's get those likes to reach that 100 so we can get this thing rolling. Really excited to have everybody in here today, man. Welcome back, team. Welcome back, and welcome back. Oogie Boogie. Man. Oogie Boogie, good to see you here, bro. Oh, man. I love it. That's right, man. Mic check. 1 2 1 2, right? You would hear who was it? The Mast Investor, right? Back in the day, I used to listen to that guy all the time, bro. And he would say things like this and I didn't even know what he looked like, right? But I was like, he's got a little bit of soul in his voice. Could this guy be of a different type, right? And then I'm like, he's like, miggity mic check, miggity mic check, miggity. So I'm like, oh damn, I want to do that too, right? Because I'm vocally, that whole thing works as a good I would say like as a warm-up, right? Because you want to make sure that you can speak explicitly clear, make sure that you're bringing out your message with utter dominance and just assurance, right? I want to make sure that you guys know that I mean what I say, and I mean what I say, and what I say is what I mean, right? All right, man, we are at about 80 likes now. It's getting exciting, man. It's getting exciting. It's getting red hot up in here, man. Make sure to get those likes rolling. Smoke Screen, what is up, dude? Good to see you there. What is up, Lynn? Guys, you know what? I know that there's a few people out there still kind of struggling. Oh, sorry, guys. One more thing. For those of you who already signed up to the Lifeline membership, which, by the way, is this, I want you to know that all you have to do is just send a copy of your receipt inside of the Discord, wherever it is, even by email. Okay, you can use that email right here too. Just tell me that you did sign up, because I noticed there's a few people out there who signed up who haven't actually claimed it. So just let me know that you did already, and I'll be able to assign, I'll throw you the lifeline when you get into the Discord. So please do me the favor and don't drop the ball on that, right? Because you're just giving money away. Give me, let me actually throw you the lifeline. Come on by and everything will be good. Andres, my brother, thank you so much, my bro. That means a great deal to me. So let's see. Let's look up. Let's look up just a little bit. Okay. You know what? It looks like we already have around $7 on donos. That is good enough to choose one person for a free membership for 1 month inside of the Arca Bulls trading team. So make sure to stick around because now we have one, right? So for guys, if you do these donos, even by the smaller dollars, I'm gonna try to make the equivalence of one of you entering a lucky participant, right? Is gonna enter the Arca Bulls trading team for a free month, right? So any dono is gonna go straight to that, right? We're gonna give it right back to the family and bring them right into the trading team so that you can see what it's like trading with us every single day, right, you guys? Even on the days where we have off, we're still in the live stream, right? We're going over things, and I'm just about ready to put even more educational content inside of that Discord. So make sure, join up. This is going to be a very, very limited time that I'm going to be offering this one-time fee for forever. Okay, you pay this one time, and that'll be done. We're at about 183 members that are paying the regular $9.99 a month. I'm going to tell you this. When we reach 200, I'm going to close off any entry to the Arca Bulls trading team. When we reach 200, I'm going to close off any entry. Know this for a fact. I'm going to say it because those are the people that are going to be grandfathered at that price. I already have around 216 people total, including the Lifeline members, okay? But when it reaches 200, I'm going to stop it, and I'm going to just reintroduce it at a different price point way later in time. Okay, you guys? So make sure to get in as soon as possible. Guys, let's go ahead and now take a look at the chat, right? It's at 95 likes. Guys, yes, the lifetime membership is these links right under here, right? You can also find the link in the description below. If you can't scan it, right? Just I put it in the description for you guys too. So, yeah, we're almost there. Look at that. We have 3 more likes to go. Make sure to get this thing to 100 likes. We get this thing rolling. So Gucci Loud saying, yo, I was at work earlier and couldn't type. Bro, you're a legend, and it was dope hearing about your music producing career. You're a legend, and you worked with a... No, I actually didn't work with Ray Sremmerd. I was working on creating some mixes, with their songs when they first came out. And that had a lot of hype, had a lot of attention, right? I did a bunch of them, man. I was featured in Trap City. I was featured in a whole bunch of things, man. I have music credits in 20th Century Fox for some TV shows that are out right now, dude. I've been signed, right? I was a touring musician, right? I've been at it, man. I've been at it for a long time. Right, but yeah, dude, it was really interesting. But now we're here, man. We're here in the trade, and we're gonna make some opportunities happen right here. So yeah, it wouldn't come without surprise that I'm absolutely this influencer, right? But I will say that I never actually thought that I would be an influencer for stock trading, right, dude? I never thought that was gonna be the thing. I never planned for that. You guys already know, man. All I wanted to do was just express my mathematical opinion on Twitter, like 3 years ago. And in fact, I just like I said it the other day, that guy that usually is in like really public area and he's drumming on his like buckets and stuff, like, and then you circle around that guy, right? That's what it kind of felt like. That's what it became. Because I was dead ass broke with an interesting mathematical approach, right? Whatever you want to call it. All of my analysis, all of my threads were completely based around mathematics. Yeah, baby. Right? And I put it together, and I would just forward look price on tickers like RDBX right, when it was around, before it was CSSE for Chicken Soup for the Soul, and tickers like MMAT, right? Sometimes MMTOP. I did it for GTII. I did it for BBIG, for all those tickers back in the day, man. I put together mathematical approaches, and I would meet the price very often. So I never got a peer review. I never got a peer review from anyone. Everybody just kind of stared and they were like, oh shit, this guy's calling the prices. So that just grew and it grew and it grew. And then I did BBBY and I nailed a freaking 115% move on that in one day, and it grew even harder. And then I kept on nailing other plays, and here we are at 11,000 subscribers on YouTube, 5,000 something on Twitter, 2,400 on Discord. Guys, it's massive. The network became big. I never planned for that, but here we are, right? I was trying to make it in music, man, although, whatever. But we're here, and I'm super excited, and it's been an amazing road with all of you, man. And check out the freaking likes, man. We just made it all the way to 120 likes, and we have it now, bro. We now have it. So we're going to get this analysis started, and we're going to find out what the heck it is that GME and AMC is doing, because remember, just yesterday in the prior day, we were already observing the potentials of getting an upside on GME based on a really interesting read. For a chance to win a membership, a free month into the trading team, do you remember what that was? Do you remember what the idea was? What gave us the idea that GME might have an upside today? And it was a very interesting one. Does anybody know the answer to that? And for a chance to win that free month, if you answer it correctly, you'll get it. But if it's really too far off, then we'll go ahead and just make another question later on, and we'll get you to win in another way. So Miguel is saying the best data chart reader. I have everything in AMC, even the kitchen sink, 3 years strong. When I cash out, I'm riding with the short king. Man, let's go, bro. 2025 will be a market correction, my opinion. Reverse. Yeah, I think so too, man. I think we're still within a bull cycle. Go ahead. I think we're still within a bull cycle right now, right? All right, so if we get 200 likes, I'll send someone Arca chooses $25.59 to buy a share tomorrow at open, says Andres. Bro, oh, damn. My bro is bold. Click on it. Go ahead. All right, so Gray Man saying Kitty farted. Agent Smith, let's see, DFV call options. No, that's not it. No. Michael Anthony saying DFV call options. No. Okay, so the question is, for a chance to win a month inside of the trading team, do you remember what told us that we potentially were going to see an upside on GME? It was a really far-fetched idea, and I know it's one that really stuck out. And some of you were already like, oh, that's interesting. Do they have an Arca Rockstar card? I don't know. Let's see. Bouncing off of the 50 EMA, no. Let's see. Salute Arca, says Robert. What is up, Lux? Good to see you, buddy. Agent Smith saying DFE is owning the options right now. Bears are stuck. Let's go. You know what? Actually, there is something that we need to observe there too. So I'm going to bring that up so that we can let's see. Yeah, we're going to go over the options flow as well, you guys. We definitely should. And I'm going to bring it over here. I'm going to prepare it so that when we're ready, we're going to go over these numbers too. Because have you seen? Yeah, I think somebody was mentioning. Here it is. Okay, so let me go ahead and show you this post. So this is it right here. What the fuck is going on? AMC, GME, right? Check out the IV on GME. The GameStop options, right? The June 21st expiries. Something is going on at the 125 strikes, and this thing is, the IV just exceeded 900%. So yeah, there's absolutely something going on there. So that's what I mean. I'm going to go ahead and prepare options flow here, and we'll go over that data and take a look at it ourselves, because that post was created 14 hours ago, and we're going to see what the number is now. And what I will say, or what I will ask from some of you, is please go ahead and take a look in your options chart and look for the 125 strikes. Bless you, baby. Look for the strike. You click on this down. And then look for the IV. June 21st expiry. IV. So if you could do that for me, go ahead and let us know. But still team, I'm still waiting on the answer. I'm going to go ahead and check on the chat right here to see if you got it right. Let me just go ahead and revert here. Just got to make sure I'm signing in right to the options flow software that we have here from Quick. Okay, here we go. All right, yeah. The only thing I'm asking for you guys is to make sure to give me the IV on that because it was a previous read of 900%. Right? Let me go back to the chat here and find out what's up. Oh wow. Okay. Yeah, guys, and no problem if you don't know the answer to that. Right? It's all good. It's no problem at all. Yeah, baby, this one is not working right here. Yeah, we're going to have to do the world one. Try this one. So, Smokescreen is actually telling us that is 979 on the IV. Wait, John Ross is saying that it's 1,255. John, how are you getting that information? Are you looking at the on Robinhood? And are you also getting that info? Oh, you're getting off of Moo. Okay, you guys, check this out. Okay, yeah, guys, if you're tagging in the IV, let me know where you're getting it from, right? So ESR is mentioning right here a 224.5% IV. Fact Finder, a million is at 100K. Let's let it rip, right? So yeah, guys, let me know what you're thinking. And you know what? Let's go ahead and just flip over the screen here and take a look at this side and go into GME and see if we have similar results there. We're going to go into... actually, you know what? I'm not going to be able to see the... I might not be able to see the volume. Let's see by strike. Let's open up the matrix on this. And let's go to the... so we said 125, right? And that's going to be right down here. And the expiry was June 21st. All right, cool. Let's go to it, right? Let me... Where's the heat map? There we go. Okay, yeah, so let's go to the 125s. And let's take a look. Let's see where we are. June 21st right here, right? So I'm seeing volume right now at 28,341. It's clearly pumped. Let's look at the open interest now and observe those strikes as well. Let's go to the strikes, actually the matrix. Turn on the heat map and let's go all the way down to the 125s. Wow, there is 112,971 open interest at the freaking strike for tomorrow. Holy crap. That is massively extended. But there's, let's see, so Agent Smith saying, but there's a correlation between DFV, but options low IV, then sells high, wash, rinse, repeat. I understand how that could be, yeah. Tasty updates during market hours, so that was all, really? Wait, ESR, the read that you got was at close? You can get it that fast? I usually thought that you were able to get that information by the next day, right? So Tasty Trades is getting his information right away. So it's sitting at 224.5%. But so it dropped from 1255. Is that what it was? Are you able to see if the open interest or the IV? Sorry, are you able to see if the IV was lesser or was at one point to those high numbers to the 1255 that our Robinhood is showing? Does Tasty Trades have that like ability? Does it have a historical IV is what I'm asking, really. So GameStop, let's see. Yeah. Gray man, let's see. GME gonna bounce off the off the kitty titty, bounce off the moon, then smash right into your anus. Boy. No, you need to read back. Okay. So right now the IV on Thinkorswim is 1,227.50. So that's on toss right now, and that's for the 125 strikes. And this was, I mean, according to today's information, we're not going to get this to be renewed until tomorrow. But the open interest is currently sitting at just about 113,000 with the volume. Let me just go back to the volume and read it for you guys one more time, because the volume was pretty significant as well. And yeah, 42,400. So that's no, sorry. That's 28,341 at the 125 strikes. That's ridiculous. Let me take a look at something else here too, because wow, I mean, are we really that extended? Jeez Louise, bro. It's yeah, I mean, there could be, I mean, that's massively out of the money too, you know. That's the thing as well. So we have to also keep that in mind in some way, bro. I mean, all those could be destroyed. All of those could be they could be worth, you know, essentially nothing at a certain point. So Fact Finder is saying Nina is, oh, I got you. DFV building stronger base. I've heard that before. I've heard that theory before, that he's just building a stronger base. Why would now Ape is saying, why would some buy that many options so far out of the money? Well, the big, you know, the whole thesis behind buying way further out of the money contracts is because it's a higher risk to a big ass reward, and bigger. Right? You have a massive amount of extrinsic value from $125 to at the money. And if price action, you know, drastically increases on some catalyst or whatever, then that could be a heavy gainer. It could be an options contract that could really gain a serious amount of a serious amount of upside. But right now, whomever is holding those 125 strikes by tomorrow, if that IV is sitting, if it's really that much greater from 200 or whatever that was, all the way to 1200. Let's put it this way. IV is measured by the Greek Vega, right? So Vega is going to give you whatever amount. So you know what? Let's take a look at it. Guys, look inside of your Robinhood or look inside of your Thinkorswim and give me the metric of Vega. Let me know how much Vega this has, and we'll be able to make a little bit of math right here as to what the gain is going to be. So let me know what Vega is. Put it on the chat, in the chat, wherever it is here on Discord or inside of the YouTube chat. So now Fact Finder saying, Arca, so are these IV good for a squeeze? It's good for gamma, right? So gamma will with IV. Okay, you're putting an IV pressure on, or an IV crush on the puts in this end, which is going to create hype. So psychologically, it's going to create upside price action. People are going to want to bet the upside more. So yeah, there could, I don't know about the squeeze, but it could put in pressure to the upside. And I already have targets that can kind of give us an idea on that. But yeah, guys, let me know what that Vega is. I'm also going to look at it right now for myself. Okay, DJ is giving us a Vega of 0.30s and 2. So let's kind of make the math there, right? I'll try to pull up something here for you guys so that we can do it together, right? Let me get this calculator here, and let me put it right up in here, right? So if you're getting a metric of 0.0003, you would multiply this times 100 because you have 100 shares inside of an options contract, right? So that gives you about 3 cents for the 100. So if you were holding, let's say you were holding 200 of these contracts, 200 of them, right? So you would multiply that times 200 contracts, and you're getting $6 for every single point of implied volatility that it goes up or down. So if you're holding 200, right? Remember this. If you're holding 200 options contracts that are expiring June 21st at the $125 strike that have a 0.0003 valuation of Vega, that means that for every point of implied volatility, you get an increase of 3 cents. right? So you multiply 0.0003 times 100 because there's 100 shares in the contract. That gets you 3 cents. This is just Vega. We're just measuring Vega only, okay? Only implied volatility. So now we're putting the example that if you had 200 of those contracts, you're getting $6 for every single point. We just noticed implied volatility go from 200 to 1,200. So that's 1,000 points. So 6 times 1,000, you're getting $6,000 in only Vega. That's only implied volatility. If you had 200 of those contracts. Now, guys, I'm not even gonna lie. With implied volatility, your gamma is gonna go up, and so is your gamma, and so is your delta, right? So what's the delta, DJ? Let me know what the delta is right now on that. So we already have a valuation of around $6,000 just based on implied volatility, right? So we have that. Let's go ahead and figure out the delta. What's that gonna give back? Let's see. DFV will start at 5,000 blocks, back up to another 100. Yeah, that's what people are saying, that he's going to rinse and repeat. Buy and sell. All right, so we now have calculated $6,000 of implied volatility by owning 200 of the options contracts that are going to expire tomorrow at the $125 strike. So now, let me get the measure of delta. DJ, if you're in there, buddy. Oh, sorry. Wealthy. Gotcha. Delta is sitting right now at, thank you guys, thank you. I got it. So 0.00552 is your delta, right? So what that means is that you'll get, let's multiply this first by 100 because there's 100 shares in one contract. So you're getting 52 cents for every dollar increment that you get up or down. Right, so if you go down a dollar on price, right? I'm talking about price. So if GME is trading at $25 and it goes down to 24, you're losing 52 cents in that 52 cents in that contract, right? So now let's say that you had 200, right? So we multiply the 52 cents times 200 contracts. You're getting $104 for every dollar up or down that it completes, right? So this thing, if you picked them up, where were we? Where was the price? We were down. Okay, so let's just say that you picked them up at $23, right? We came down there today, and price action looks like it went up to $26, 23 to 26. So 104 times how many dollars was that, right? 23 to 26 times 3. So this is going to be times 3. And you get $312 off of Delta. So now you have $6,312 measured. Now, let's go ahead and take a look at Gamma. So Gamma, let's see. Gamma is giving you 00. Here we go. Let's go ahead and clear this out. 0.0010. This is your Gamma. So think of this as a bonus, right? For every dollar that the asset completes, you're going to get 0.0010 times 100 shares per contract added to your delta as a bonus for completing that dollar, down or up. So you're getting 10 cents, right? So multiply this times the 200 that we're saying position, you're getting $20. So now we move $3 up. So times 3 is $60. We add the $312 of delta, and we add the $6,000 of Vega, and this is what you would end up with by tomorrow if you pick them up at $23. If this thing really does go all the way to 1,200 IV tomorrow, that's what we're looking for. If you own 200, which were worth nothing, these things were probably worth literally 10 cents. They were probably worth 10 cents like a day or two ago, or 3 days ago, whatever that was. So you're literally getting a freaking 6x on this, man. Like it's or a 600x, whatever that is, whatever that metric is. But this is what you would be getting if you own 200 of those. So put down $200, right? or 220, right? Because of the cost or whatever. So $220 turns into 6,372 with 200 contracts, 125 strike, June 21st expiry. Insane, right? Now, for those of you who don't really understand what theta is, that's your time decay. It's one version of measuring time decay. So if that let me look at the metrics here for time decay. We're at theta is reading. Where's theta? Wow. Okay, man, that's tough. That's tough. Oh, all right. So remember this number, right? We have 6,372. Let me just jot it down right here for us, and we're gonna measure theta. So 6,372 is your base number, right? This is what it would be worth tomorrow. But I noticed now that theta is are you serious? 0.147. That's almost 15 freaking cents. So 0.147 of this is what you're losing per day of holding the contract. So if that really is the case, multiply this times 100, because 100 is the number of shares within one contract. You're losing $14.70 per day of holding that contract. That's the thing with getting these really, really far out of the money options contracts. They have a huge theta, right? So now, because we have 200 contracts, let's multiply the 1470 times 200, and you're already deducting 2,940. So in fact, 2940, actually, that's, wow, man, 6,372 minus 2940. This is in fact what it would be worth tomorrow if you picked it up today for 200 of those contracts. Insane. The underlying stock price, the underlying stock price is you buying it. It's saying that you're buying it. What the scenario that we're going through is you buying it at $23, and this thing went up to $26 today. Right? So but we're saying that the IV overnight is going into 1,200 or 1,200. Let's just say 1,200. So we're calculating the IV plus the gamma plus delta minus theta. So that's how we're creating this valuation for this options contract right now. So it would be worth an initial 6,372, but because we're holding it overnight, and it has a 0.147 cent theta or decline for every day holding it, and you have to multiply that times 100. It gives you the $14.72. $14.72 times 200 contracts is what we have, and that's what gives you the minus $2,940 with theta burn, with time decay, because you held it overnight. So I don't know where IV went during this $26 run today at the top end, but it almost feels like it would have been more lucrative to realize the gain when you reach those highs there. But then again, I don't know, right? You would have to make the calculations yourself, because if IV wasn't as high, but your valuation of the options contracts at that freaking high was larger than the $3,432 that you would receive after theta for holding overnight tomorrow, then that's where you mitigate your risk, or that's where you manage your risk. You would then determine to hold overnight, or to just realize when and if price action reaches $3 upside, because theta is a freaking monster, guys. Theta is a monster, and it does increase as you get closer to the expiry. So, which is why the saying is alive: do not marry the options contract expiry or strike. Don't marry the strike, don't marry the expiry. As soon as it's in the green, if you're really pulling off great numbers, just realize it and you'll be good to go. Right? So, Fact Finder saying, so what you're saying basically is to the moon. I like what I hear, not gonna lie, let it rip. So Miguel is saying, I did sell, you sold June 21 calls. I bought at around $2.80. I expected to reject off of the 200 MA or EMA according to fractals. Okay, well, see, that's a really interesting concept too, right? So if you, let's just say that you bought, at $20, whenever it was that we were there, right? Let's just right over here, right? This would be on May 30th this year. If you were to have bought those contracts, they would have been worth literally 10 cents, a penny maybe. Right? They would have been worth nothing. And price action went up and up and up and up and up and up over to these valuations here of around $48. If you got your options contract to be worth $48 from all the way down there at 125 strikes, those would have been up thousands and thousands and thousands of percent up because of this right here. Because in the after hours, you can see that there was a massive gap up from 22 or whatever. Where were we? Were we saying the 47? We were saying $20, right? Where the fuck was the $20? Here it is. Fuck it. We're doing it from $22 or 23. So yeah, if you bought them at 23 and you experienced overnight, remember, look, this is the whole day here. You could have bought them at $21. You could have bought them at 23, wherever it was. So what happened overnight is that price gapped up to $35.30. So remember what we were talking about is multiplying your delta. So your delta would be times 100 shares because there's 100 shares inside of an options contract. And you're getting it for every dollar. Your delta would be multiplied by every dollar that you complete to the upside. So if you were at $23 and this thing went all the way to 35, you're looking at $12 there. So $12, $13. So if you're going to get that increase like that from this 22 or whatever that was down there, all the way to that $35, that's a shock that your options contracts are going to see at market open. So it's in the pre-market here, well, post-market or whatever, and it hovered. It hovered. Right? So right here at market open, you open the market at $40. So the last thing that your options contract saw was $22. And the next thing, it was in the blink of an eye, because remember, you can't trade options contracts in the after hours, in the pre-market either. So it closed its eyes for 1 second, and then in the next second, it opened its eyes, and it was at freaking $40. So from 22 to $40 in a blink of an eye, your IV is going to rip every freaking put and shorts face apart. And that is going to create a huge sell event. Everybody's going to take profit because those options contracts are going to be worth literally thousands of percent up when you experience an implied volatility bump that big. So implied volatility bump, meaning that if you bought your options contract here and you rapidly move from $27.88 all the way up to $30, that could have been a 40 to 50, maybe 60% gainer, depending on how volatile and how fast you got there. Now we're talking about 22 to 40 in a blink of an eye because that's all it saw, because it's closed during the post hours. So in a blink of an eye, it jumped all those dollars. That shit is insane. Say again, buddy? Oh, yeah, got it. Yeah, so right over here, right, guys? Check it out. Right down here is what I'm talking about. This is where you bought it, and then the next day opened up right here. The difference between this moment right here, right, around here, sorry. The difference between this moment here, where market closed, and then this entire opening right over there, where that red candle is, that's what your contract saw. It closed its eyes one moment here, and then in the next second, it opened its eyes up, and it was at $40. That's an implied volatility spike. So everyone that had that options contract is going to realize, because they're thousands of percent up. And this is why we would get a sell-off like this. It's not because it's a short attack. It's because everyone is literally taking profits from a freaking gnarly squeeze. So that's what typically happens when you get those massive gap ups like that. We're literally going to gap back down, and we're going to close the gap, or as close as we can do it. Right? We did the euro open low. We came back to the euro open low. And in fact, we made another run to the upside and finally came back and covered that gap that the people realized, that freaking huge 10,000% gain, whatever that was. Right? So it's important to understand how the dynamics of options contracts work as well. Right? So that you can determine how hard someone's position is going to go from one day to the next. You're going to be able to determine whether that's going to sell off or not. I mean, you tell me the truth. You went in $200 and then you were worth $6,000 off of $200. Are you going to realize? Don't think of it as diamond hands. Think of it as any individual person alone. You just turned $200 into $6,000, you know? So fuck. You're going to get a lot of people who are going to realize that. You just turned $2,000 into $60,000. Like, yeah. You know, people are going to take profit and this thing's going to capitulate. Right? So that's usually what I mean behind strategies, right? You have to know a certain amount of details of certain strategies, and then you'll be able to determine whether price action will go up or down. Now, I noticed earlier that no one actually answered the question that I had. So I'm going to go ahead and ask another one a little bit later, but I'm going to go ahead and tell you for the free month, right? For the free month. But what I'm going to tell you is that the idea behind price action going towards the upside today on GME was a little bit far-fetched. It was outside of the norm. And actually, it's interesting because AMC didn't get the upside, but it was AMC. It barely got the upside. This is the reason why we thought that GME was going to go bullish, was because AMC, it was actually an idea from price action. I forgot what his name is. Price action something. He asked me if AMC, if this thing started squeezing, would it bring up GME? I said that because I don't believe it's going to squeeze on the next day at all, that it wouldn't bring up GME. This is a small cap. GME is a large cap. It's a very, very big difference in weight. But I did say that it's interesting because actually AMC is within a very bullish formation, which means that we could actually grab a hint from this small cap telling us that its index, right, because AMC is a sympathy play to GME, that we would be getting an upside based on its index. Right? So that's exactly how it happened. And we got a little bit of an upside, right? We closed the prior day at 478. We ended up at around 482. I'm not even sure where it is now in the after hours. So that is how we were able to determine that the upside may be coming in for GME. It was based around AMC's bullish position. So, and we got it, right? We nailed it. Now, the difference between this type of speculative play and something else, like, for example, somebody was asking, did anybody take Arca's call out on FNGR? Right? Because it went up, right? It freaking did. So because we did go up, right? This was actually done through volatility or the pair of volatility versus stochastic momentum. And that is usually something I do, right? It's on the daily time frame. I back tested a certain criteria all the way throughout its entire trading history, right? I collect all the data. I create the data set, right? Standard distribution curve tells you where we're going. So this is how I was able to determine that we were about to experience an upside. Critical break of volatility inside of the 15%, coming out of the 15% with an upside pivot on both volatility and stochastic momentum. That means that it fired off the signal. So the signal, I already have all the upside targets for it. So I said that this is likely going to start making an upside soon. Let's go. Right? So this is a different thing. This is more data driven, which is what I love. That's where my edge really is. But the thing for AMC, this was a complete speculation and based around psychology. Because I don't know if you've noticed, but AMC and GME run off and they thrive off of psychology. Right? So if it is the fact that they thrive off psychology, then I'm going to go ahead and put psychological formations like this, for example. A lot of my master students, they know what this is because they've seen the video and I've uploaded the video of some places. This is called something that I've coined myself, right? This is called a bullish buy formation breakout. Why? Because you have two bullish formations within one that lead to different targets towards an upside. And this happens a lot in the financial markets. We're talking about bullish buy formations and bullish try formations. It's a cascading effect. It's a domino effect of time. So you get a larger time frame formation, a smaller time frame formation within another tiny one that all suggest the upside. And by doing so, I'm able to give you every target along the way for the next week. Because that's what it's timed, right? You're looking at a 6-day play amongst a 4-day play amongst a daily play. So we know the targets from 1 day, 4 days, and 6 days. Very interesting stuff, right, guys? And this is why I'm telling you, make sure to join the Arca Bulls trading team, right? And also, make sure to grab that last seat in the ArcMastersCourse course for the beginners trading and strategies, right? So, trading and charting. All right, you guys. So let's go ahead and take a look at the price action here for the immediate short-term time frame on GME. Let's just find out what it's looking like, right, for tomorrow. Enough speculation. We already done goofed on that enough. Okay. Let's get this. We're going to look at volatility right now and momentum. Take a look at this. We have an upside pivot here on stochastics. We also have an upside break of volatility, right? So for the master students, for the trading team that was with me yesterday, trading Bitcoin really late at night, this is the criteria that we use from a 5-minute time frame, right? And what happened to Bitcoin when we started noticing that we had an upside pivot on Stokes and we had a break of the 15% of critical contraction? Well, we knew that volatility was entering. People started to buy and short more. The transactions started to squeeze, right? So we determined that this was likely going to make an upside move starting in the immediate short term, so we positioned. What happened was that we called out a play, and we literally called out a $400 move on Bitcoin based on the 5-minute time frame criteria that you're seeing right now. So what happens is that once the 5-minute time frame cascades into its closure, that would leave a deeper upside validation on your stochastic. It's going to go up to here maybe. And you're going to have an official break of volatility. When that happens and your 5-minute closes, your 10-minute would then start feeling that upside as well, and it would also start to break or get closer to break. As soon as you start breaking above the 15% on a 10-minute with an upside bias, that is right when you're going to get the further upside. So you're going to get that domino effect, right? The 10-minute time frame. Now we're looking at a potential 5 to 15-minute play based on these two time frames. When that time frame of the 10-minute realizes its close and this actually shifts towards an upside, then it's going to cascade to the 15. Now we're looking at a 15 to 45-minute play of upside. Notice how all of those that I'm talking about are in contraction. Notice how all of them are kind of suggesting an upside pivot. That means that we're going to get a cascading effect into the future, right? So now the 30-minute time frame, it's already curving. It's already feeling that. And also volatility is inside of the critical point. In fact, that purple bar means that it's at 2% critical low, right down in here. So that means that as soon as the cascading effect or the domino effect of the 5-minute volatility going up harder is going to cascade into the 10, is going to cascade into the 15, and all of those three timeframes are going to all jumble up into the 30. The 30 now gives way to the hourly and bi-hourly. And guess what the hourly and bi-hourly do? That's going to be your 4 and 6. And what do the 4 and 6 tell us? 2 days, 3 days of upside. And if the 4 and 6 really show a huge volatility bump, that means your 12 and daily. Then we're looking at 4 to 5 days of upside, weekly upsides. You see how time cascades, right? You see how it all kind of domino effects into each other. It's your initial thrust. It's using a little bit of physics here with a little bit of statistics and some discretion with price action, identifying time and letting it cascade into each other. So this is how we're able to tell how far the upside is going to go and how long it could potentially last. For now, 5, 10, and 15 are doing okay. We need that 30-minute to reach it. So there could be an actual gap up in tomorrow. But if there is a gap up, I'm going to say this. I hope there isn't. Because when it gaps up, that means that there's a deeper retrace. But if it gaps down, that means that there's a reason for people to buy and take it back up. The probabilities usually land like that. Eat your snacks, buddy. Right? Just know that for a fact, guys. That's something that I've observed here in price action day in and day out. Right? Okay. So if we're going to get the upside price action, guys, and we're noticing that the hourly could be the one that's reaching our max, then let's identify the price action on an hour. That's going to be your ATR. Let's go ahead and use the statistics here, and that's going to tell you what it would be. Hourly time frame goes up about 66 cents. So GME here would end up at around 26 bucks, right around here, right around there. And why would that be something for us? Why would it go to $26? Well, if I go back to the 5-minute time frame and you identify this, we were supposed to go to $26 based off of this pennant breakout. We were looking at this at the close to market close, and we reached our first target perfectly, $25.92, right here. Right? So, but I will remind you of the receipts that I provided for you yesterday. Take a look at the targets that we had. $25.85 and $26.53. We're getting a shift of... Hold on just a sec. What is the hourly valuation again? 66 cents. So if we're getting an hourly 66-cent shift because we're already noticing that the 15-minute and 30-minute are experiencing upside based on volatility and stochastic momentum, then that tells us that the next resistance is going to be around 26 bucks. We're reaching that area again. Right? So that's what I mean, guys. And if we use further, if we're then saying, okay, so then if we're looking at volatility expanding with positive price action and stochastic momentum is now bleeding into the 4-hour time frame, like you said, Arca, then what would that be? So 4-hour time frame is sitting with an ATR of $2.52. So then we would be jumping in to the $27 target. And guess what we already have jotted down here for you? That would be the next target of $27.29. I already have the targets ready for you. Right? I already know where it's going to go in case it does have that kind of volatility. Remember yesterday, we were talking about touching back down to the areas of 2375, which we did. And we were saying, just in case you do not fail this, if we fail 2284, we're going to 20. But look what happened when we touched 2375. Right? It bounced all the way up to 26 bucks. So we use areas of confluence, guys. We use areas of high pressure, high demand to determine how strong the move to the upside is going to be. So for now, yeah, it's looking good. Do I think it's going to squeeze tomorrow? I don't know. I can't tell you that. Miguel saying, Arca, you were the man, bro. I love your charts. I see the same fractals playing out when we broke down on August 10th. But we were going up. We hit all-time high, all-time low already. Yeah, that was $9.95, which is April 16th, April 17th. This is right when, in my charts, right? Right around this area here. We were talking about it on April 14th. And I spoke to you guys live, and I told you that this is likely going to drop to the $9 zone. And this is probably going to go to 20 bucks, 22 bucks. Look at the resistance at 2006. So this was the beginning of it. Something was really weird in volatility. And you know what? I mean, I've explained it to you guys before, but it was there. It was just, that's the fact, right? It was a buy daily. It was massive. It was a massive read, guys. It was a big read. And that's how I was able to determine that we would likely see a big ass move. Even actually, yeah, your 3-day signatures were fucking huge. These were enormous. Right? So that's what we were looking for. But in reality, it was your buy daily. Because look at the size of that blue area. That means contraction. That means that no one is buying or shorting or nothing. Right? So this was incredibly low on the buy daily time frame. We measured the distance of this entire phase here, multiple days. And we noticed that it was the third largest iteration of contraction that the asset had ever faced before. And it was really interesting because there was another iteration on the buy daily back in history. I think it may have been around here. where there was a huge upside move. There it is. That was responsible for a break of around $4 all the way up to like $7. So could it be that things started getting wild here before it started going all the way to $15? You know? But it was all based on contraction. Now, one of the larger ones was in here too. And look what price did. Look at that. Capitulation, like we said, going down to $9, or right? And then the explosion based off a huge contraction phase. All the way up to $16 from the low that it had down here at around $1. So because we were observing the phases of contraction, and that's how we back tested it, guys. That's how we were able to determine that something was about to happen off of no news. And that's what we said too. We were in the live stream and we were saying, is there any news? Is there something, are they acquiring? Have they announced anything? And we all looked. No one found a single thing. There was literally nothing being said about GME at all. So we were all curious about why the hell would it explode like this in the first place? I'm like, guys, it's just, I said it like this. I said it clear. I was like, guys, it doesn't need news to explode. It's a behavioral anomaly. We need to pay attention to these phases because it happens. Whatever happens in the world, whatever, guys, it's in statistics. Whatever needs to happen will happen in order to meet the higher probability of that stat. You know, I don't have control over that. I don't know what it is. Right? I had no idea what it was. But we were already identifying that there was going to be a huge pop based on contraction. And that's, guys, honestly, somebody always knows something, right? That's really, that when it gets down to the nitty gritty, someone always knows freaking something, right? But these are the type of ideas that we put together, team. I want to make sure that you guys know and that we're always looking at a new and fresh approach to understand where price action is going. We want that deeper and deeper edge, and we'll always express it to you guys. Go Chiefs! That's when Deep Fucking Value started buying his shares and calls, which is really interesting, right? We were talking about it on I think it was Saturday, April 14th, something like that. I think it was. And it was on a Saturday, you know, so I had no freaking idea. Let me see, right around, I think it was, yeah, check it out. So this is Monday right here. So it was actually Sunday. Oh, it was the market prep, right? It was the market prep for Monday. And this is what we said we're likely going to drop here, but then this thing is reading a massive upside. We were weird because there was a huge drop. So we're like, oh man, I don't know if it's going to survive that. But then we left it alone. It started moving up. We're like, what the freaking hell, it worked. Right? Vibration, aka Arca sounds. You guys really think LVD saying GME is just going to go on the path of NVIDIA? My apologies, half awake. Let's see, the moves on SPX going into July are going to be insane. I agree, man. I agree. There's something up, man. There's something up. And I don't know what it is, right? We're already noticing that the IV is going, ridiculous. Arca said, squeeze, bro, let it rip. Okay, so a lot of people have been asking me, do we have another signature like it? Like what we found down here? Because if you're looking at this, guys, it was a perfect situation. We were already observing we were already breaking volatility here, right? Look at that, baby, right? And we were sitting at around that $10, $11 mark, 1180s. Right, so because we had just broken out and this was already so low, I'm thinking, dude, this is about to create a historic low on stochastic momentum. Look at it. Put a line like, and put a line like that, right? Like just like that. And if we look back, then we have already reversed price action in so many iterations from exactly that point. Now, given the fact that we didn't reach exactly that point, it's all good. It's reversed heavily. And we notice some of those reversals to be, let's see. Oh, geez Louise, man. How the hell did that work there? The bump here from $9 to what the hell was that up there? $9 to $86. Look at where stochastic momentum was. Right? So there have been massive explosions there. And that's part of the reason, guys. That's part of the reason. We were right here. We were down here somewhere. I'm like, dude, yeah, we're going to reach that historic low. And this thing's going to pop the hell off. But I was really careful about that because I told the analysts, I'm like, hey guys, I'm going to be honest with you, man. If I put out a GME video saying that this thing is about to go 300% to the upside, because it is, I am probably going to be hated by everyone, and everybody's going to start attacking me because they're going to think that I'm going to pump the stock. But I said it live. So CoinFox brought the idea. I looked at it. I fucking agreed, and it was going. It was definitely going. So I got asked that question just recently. Is there another signature that this thing has that would lead price action towards that upside? Well, let's look. Yeah, all we have to do is simply look. Right? Okay. So what we want is identify volatility, which is here, representing the disbursement of returns. And this is also your transaction rate, right? So we want them at the critical zones, somewhere inside of the 90% or somewhere inside of the 15th percentile on a critical time frame, though, like this one. The 3-hour time frame will give you a move that is worth maybe a week long to 2 weeks long. And it's already massively in contraction, and it already has a huge upside pivot. The criteria here, we can do two criteria, right? We can do two of the options. We can decide to measure any time that volatility entered, right, the critical zone, or we can measure it by any time that volatility exited the 15%. In this case, I would highly encourage, to backtest this based on, let's see. Yeah. Let me see this iteration here. Yeah, it would be right here. This is that's the mark right here. So that would be the zone where volatility started to enter with an upside pivot. So what we do is we measure that every single time, right? So here's the entry right in here. Let me see. That's 15%. This is 6% right there. This is another iteration. Then we look at it again, right? Right here, 10%. That's another iteration where it entered. And let's see. This is another iteration right here. Right? And that's what I do, guys. It looks like we entered right here because the blue marks. And then I start back testing all of them. I see what price action did. Right? I see what price action did historically. And then I come up with a data set based on all of those results, just like I did here for FNGR. Here are all those iterations, right? These are all the samples. You grab every sample where a certain criteria happens. Wow, that's Sonic, baby. And we put the sample set, we condense it into a data set that then gives us the higher probability moves with an accuracy. And I also will calculate for you the standard deviation and upper and lower bounds of the first and second and third. But yeah, that's how we do it, guys. That's I'm not gonna hide it from you. I'm not gonna do anything. I'm just gonna be honest. That's how we measure our criteria. There are many more steps into that and a lot of detail to take into consideration. But that's the primary basis around the system built around it's the footprint model, right? There's much more to it, guys. There's much more. That's not it. Okay, that'll give you a probability, but you have to then take into consideration trend and what's the strength of trend. You have to then you have to look left. Are you at a critical resistance? Are you at a historical resistance? Are you near SMA 200 on a daily? Are you Are you on at an SMA 200 resistance on a daily, bi-daily, 3-day, 5-day, weekly, bi-weekly? Are you at a resistance on a semi-annual? We're getting the monthly, the 3-month, and the 6-month closures in about 8 days from now. So are you at their cap? Are you at the resistance? There's so many things to take into account in order for us to determine and say out loud and just put my balls out on the line like I do, right? And just tell you that this target is the one that we're going to hit, right? There's a lot to take into account. So, but yeah, that's what I'm observing here, guys. And there is a signature on the 3-hour time frame. Is there another one though? I guess if we are experiencing one, yeah, there would be the hourly into the 3 hours. So here's the hourly break, right? That's your upside, huge upside. Then you get your pullback. Then your 2-hour feels it, right? Here's your 2-hour. Here's the almost break out of volatility. Then your 3-hour, right? Here's the upside pivot. Here's contraction. We're going to start expanding. Your 4-hour will then get that upside pivot, and this thing would actually start to just expand. So the strength of the move is really coming in from a 3-hour time frame. So if it's a 3-hour time frame and we can look at maybe 2 standard deviations up, the absolute strength from a 3-hour signal being fired, statistically speaking, could be $32, $31.89. Right in there. And that would be the upper bound of your second standard deviation multiplier on volatility bands. So the only way I can display it to you is to move just like this. This was my old script. We're at the mean, and we're quite literally ready to make a 2 standard deviation move. Right? Just like something like this. We resisted, came back down, supported, 2 standard deviation move. We usually do that. We fluctuate between 2 standard deviations of price, right? And that's what I'm observing here. I think it's ready for a move. So that's the math, guys. That's the way I'm putting it together here. That's the way I want to express it to you, and that's the way I want to be. That's why I want to be as honest as I can be, right? So if you're wondering, this is just another influencer, Furu or whoever it is that's just grifting or whatever, like I've been accused. It's not that, guys. It's not that at all. I want to make sure that I give you guys a viable system, that I want to make sure that you practice over and over, right? And combine it the right way for an edge, right? We're looking for an edge in the markets. That's what we do as traders. So claim that last seat, guys. Make sure to claim that last seat. Okay, so AMC, did it have the signature to the upside? Let's find a signature. Let's find the volatility signature on this. So AMC has, let me go to the 3-hour. That's interesting because in the 3-hour, it's also showing it. Look at this. Critical contraction, upside bias. That means that your bi-hourly time frame has an upside too, and it's probably still within the contraction but about to break. That's usually how I see it. It might not be it. Here you go. Upside bias and the upside bias here. Okay. The hourly time frame should have it too. Slightly upside and still in under. Oh, wow. That's interesting. That's very interesting. Holy shit. All right, let's see this. So we have regression. That is very bullish. Nice. Holy fuck. Okay. I hadn't seen this before. So usually you want to, you can use regression lines on volatility, but especially on momentum. What is it? Oh. So that's, this usually ends up with a breakout, guys. We've been following a trend here. And if I'm not mistaken, that's also the signature that we're getting back here. Oh, nice. Look at that. It is that. And look at this. Goodness gracious, more good signals. Dude, AMC is giving us the signals. This is the appropriate signature for a falling wedge. Declining volume. Falling wedge, declining volume, 2 touches of the support validate your formation. 65 to 75% breakout to the apex. That's it. That's it. Like this is giving every freaking signal for an upside. Oh, damn. Okay. Nice. Yeah. So guys, what I'm observing here is that the first price to reach would be around 507 if we can get a breakout that hard, right? It's going to take some time. Let's pull up the stats on this, right? I'll tell you what it is. Data cells, here they are. So the daily ATR top is $5.47. We're at around $5 now. Let me see. No, daily ATR 65 cents. See? Oh. Let me see. I got you. You got a little owie. Okay. All right. Let me clean it a little bit. My little guy just got cut a little. Good job. Done. All right. So, if this, guys, I think 66 cents. I'm sorry. Yeah, 65 cents. So, 480. That's 20 cents to $5. 540. It would be 540. Oh, damn. Wow. Nah. I don't know that it can actually go up that high, guys, but it's saying that it would be statistically possible to make one shot all the way to 536, which is just ridiculous. But the real target I was observing yesterday with you was actually around 547. This is meeting a lot of signatures. First of all, yes, the declining volume wedge, we're at 65 to 75% to the apex. This is typical breakout. This is bullish. We have a buy formation breakout. This is your inverse head and shoulders. These are all the targets to the upside for it. 65 cents on daily average true range. That marks off 536 to 547. And the signature on the hourly time frame, we're getting the regression on both volatility and on stochastic momentum. This is usually explosive. Kind of like this. Let me show you one. So you had this leading into this here. Right? So regressions are very powerful. I will have to admit. This was but this is such a uniform look. So the hourly time frame is bleeding into. I'm sorry, guys. I'm starting to get a little quiet here because I'm like, what the fuck is going on? I'm actually seeing signals here fire off, and they're very deep. They're very hidden. They're inside of the immediate short. Let me look at what the daily looks like, or the buy daily. Oh, that's not bad. Hold on. That's a digital signature too. Okay. Hold on. Where is this? Oh, goodness. Right. We have that huge inverse head and shoulder still. Oh, there is something. Okay. Hi, baby. So here is where the weekly signal fired at the opening of this candle. It deviated and it got a huge upside, but it's starting to correct towards the upside from critical contraction with expansion. Guys, the weekly signal is still on. Did I test that? Did I test the weekly? Let me see. 1 week contracted wiggle room. Okay, no, I don't have. Let me see what this one is. I have some old charts here, right, from back tests. I actually didn't back test anything here either. Okay, yeah, guys, there's something up. I'm gonna have to. I'm gonna back test the weekly time frame of AMC because there is something there embedded that is so deep and it's really, really, really big. So AMC is still giving me the bias. It is still giving me the bias for continuation. Not GME, it's AMC. But AMC is not going to lead GME. It's giving me the hint that there's something within GME that's going to go up. That's the thesis, this. Holy crap. All right. Flowrider Kid saying AMC looks like it's like it will go first, then GME will follow because they're closely traded. I don't know about tomorrow, but next week seems very possible. Too much anticipation for tomorrow everywhere. Historically, the markets are red on Fridays, but historically, AMC returns 3.20% on average on Fridays. And it actually returns, get this though, get this. AMC typically returns a 31.84% return on the third week of June historically over the last 5 years of studying price action. What? Don't you do that to me. What is it? What is it? Okay, I was about to crap myself, man. Oh, but it's the freaking week. Holy crap. All right, so this is the week here, the week low. All right, so if this is the week low and we're saying 547, damn, okay. That's a 20% gainer from the weekly low all the way up to 547. So on average, the third week of June brings in 31.84% returns. That's interesting. Quad witching for AMC brings back a 3.92% return. So 3.20, I think, is your average. 3.92 is your quad witching return. And I'm talking about, I have the data here for you, buddy. Look, I've already back tested the quad witch for both GME. So here you go. So this is okay, yeah. Fridays on AMC. Okay, AMC. Right. Sorry, I got it confused with GME. So historically, we return 1.01% on Fridays for AMC. So every day is usually bullish for the last five years. Okay, so now the third week of June is usually bullish with a 31.84% upside return. Okay. That's really cool. Now, I think I have my Excel spread too. Let me see. Shit, dude. Looks like my data got deleted. It's okay. We can still look at the data still. I still have it cataloged. Okay, let's pull it up. Let's see what's up. Let's get the data for the quad witch. Hi, baby. Let's go here. Just a moment, guys. I'm going to bring it up to you right now. So AMC, where are you at? Okay. Yeah, here it is. Okay, so let me bring up this vid and take a look at the data for the quad witch return. Okay, here it is. Let me make sure that I can put the quality up on this so you can see it. Okay. Okay, it's going to be a little hard to see, but I think I could get it in for you. All right. So here's my back test. So the average return for AMC 10 days into quad witching is 2.51%. Now the average return on the quad witching day, it is bullish, 1.14%. And the 10 days afterward, marking off a 21-day period, would be a return of 3.41%. And that's on open, high, low, close, adjusted close, volume, and the percentage change. That's the data that was back tested to create the mean here of the historical returns for the quad witching on AMC. So now you guys have that data there too. Run, buddy. And so that's the data for the quad witch. So it doesn't really return much, but it does. I guess the important part is that it actually is bullish, right? And also historically speaking, the third week of June is bullish. And then historically speaking, Friday is bullish as well. So that plus the falling wedge, right? Plus the declining volume profile being perfectly executed. The weekly time frame upside pivot with continuation, right? This weekly is going to be over in 16 hours and 19 minutes. That's going to be tomorrow market close. And then the hourly, bi-hourly, and 3-hour upside thrust from volatility and momentum potentially going up into the 4-hour time frame. So all of that is what's being calculated, guys. And yeah, there is a potential green day coming up. Of course, I may be wrong, and the price action may not actually do anything at all, because remember, this is an odd week. Right, so we did have closure on Wednesday, which kind of throws things off a bit, and we've had less market participants over the last couple days. In fact, on Tuesday there was less volatility presented in the markets naturally. Right, Thursday came in, less volatility presented because of the weekend idea. So Fridays you usually bring in less volatility. Right, so contraction, and then on Monday you also bring lesser volatility because people are still coming back. So then the actual the actual volatility day would be Tuesday, Wednesday, which statistically for both AMC and GME are the most volatile days. Wednesday brings in 2.28% on average, and GME also has a metric similar to that. You know, just so that you guys are aware. I want to bring in all the fucking data, guys. I want to make sure that you guys are absolutely benefiting from everything I'm analyzing, right? And then I'll just put it in here I'll just put it in here as ideas. And if you guys get to benefit from it, then awesome, man. That's great. That's all that I really want, right? And where the hell is Mama's here? Say hi, Mama. Nice. Hold on. I got it. Oh, I think, yeah, there it is. Here it is. So, and yeah, look, Wednesday, 5.19% on average. It's your most volatile day. It's the biggest day of returns. So, yeah, there's a bunch of bull signals, man. So that's typically how it works. I know that we had it off, and then also look, Thursday and Friday. Friday is actually pretty nice. It's the third largest day, right? 3.93 on Mondays. You have 5.19 on Wednesday, and then 3.90 on Fridays. I imagine that this would be, yeah. So there you go, guys. Those are the stats. We are definitely reaching some interesting numbers here. So to bring to you just a different style of analysis, right? To give to you guys another idea, a different edge. That's you know. You kind of topped me out right here for now, but that's all that GME and AMC collectively have available for each other. If there were more, I would notice more, you know. But also remember, guys, that I'm not taking into account. I'm not taking. Go to the bathroom. Go tell Mama pee pee. Go. Tell Mama. Mama, I gotta go pee pee. Go. This guy's grabbing himself like he needs to go. Sorry, guys. Just in here with my 4-year-old. Eating, he's calling me, he's doing all kinds of things. It's interesting. So, yeah, guys, I would notice that if there was anything else, right? Because remember, we have fundamental traders out there, right, that work on data like the failure to delivers, right? The settlement dates, options, flow, all that comparison. That's all good, you know. But I usually don't measure that stuff. I measure different criteria, and I use statistics against it, right? So I use mathematical models, and I pair them with psychological and geometric models as well, right? So that's where my edge lands, and I hope that you guys can benefit from something like this too, right? So if I could provide, right, that type of intelligence for you, then I hope you benefit from it, because I know that there's not many people out there who are mathematically inclined. But if I'm able to assist in some way, shape, or form, then we nailed it together, right? So that's all that I really want, guys. Okay, so remember, team, I think this is a pretty good place to leave off the stream. We've been going here for a pretty good while. Not bad. Yeah, not bad. I want to make sure that you guys get some rest. And guys, remember, right? Those the links in the bottom here, they're not always going to be available. So please make sure to take advantage while it is. And remember that I'm going to be closing up the Discord when it reaches 200, and we're at 183, I think. Okay, so make sure to come by, join the team, and the last message I just have here for you guys is if you still want to claim those last seats for the beginners trading and charting, the crash course mentorship, please go ahead and reach out to me at ArcMastersCourse@gmail, and I'll get you in. We're going to be starting this Saturday, okay, you guys? So I love everybody so much. Thank you for coming on by. And now Jay is asking me, will GME go to 200 if this vid gets 200 likes? Dude, that would be insane. If remember what we were going over yesterday, bro, right? This is my YouTube viewership chart, right? And I put it up against the daily chart from the exact same day, right? So this is your April 19th or whatever, I think it was, or June 19th or June 6th, right? All the way down like this. Look at the correlation between them. It's both AMC and GME. So I guess maybe... So the Arca Bulls team is completely trading exactly the way GME's going? That's ridiculous, bros. So remember that this is also in AMC too. This anomaly is happening in AMC. It's really interesting to see this. Right, but I will look at anything, guys. I will look at anything. Probably not FTDs, right? Because I feel like, failures to deliver and things like that, those are more for the long term. I like things to happen a little quicker, right? So I look at more sensitive data. But nothing against it, right? Nothing against it. I encourage you to continue looking, right? And if you end up learning how to chart and trade in discretion or systematically like I do or whatever, then you could apply those fundamental metrics to the type of fundamental trader that you are and just create an unstoppable force, which is something I usually repeat to my master students. Bring a lot of them come in with a heavy fundamental background. And that's from all the, what was it? The Wall Street movie with Charlie Sheen and his dad, he said it, that old guy, he said, stick to the fundamentals, kid. Stick to the fundamentals. So it's still like that, guys. It is still like that. But I like my returns within, 30 seconds to 2 minutes. So I will study different data. So I love you guys so much, man. Thank you, everybody, for coming on by. I really appreciate you. Make sure to contact me if you have any questions or concerns. But remember, if you join the team, be patient. I'll get you in the landing pad. And I'll get you inside of the trading team, and then we'll have the after party right now, right, guys? Usually the pizza party, usually the after party right after the streams. I love you guys. Thank you so much for coming on by. Make sure to hit that like button and subscribe on your way out, all right, team? Love you, team. I'll catch you soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night and or day. And I'll catch you at the Bell Mañana. Adios! Fuck yeah!